Good afternoon, everyone. Thank you for tuning in. This is Steve with Sun City Capital, and I'm going to do a short little thing here on SMCI and try to educate people on what's going on. There's a lot of, what do they call it, FOMO going on with SMCI. I don't blame people. I personally have not traded it through all of this nonsense. I trade a lot of NVIDIA. I trade a lot in the semiconductors in my fund. But this is not one that I have really taken part in. But it's easy to get FOMO whenever you see a stock. We look on the screen here. Just a short month ago, this stock was at 307, and it peaked over 1,000 on, I believe it was Thursday of this past week, which is obviously insane. That represents a nearly 150% increase. What do we look at? 100. Yeah, nuts. I mean, I think the total at one point was over 200%. In any case, it's nuts. And I want to explain to people a couple things. What I think when it comes to, should you be buying this thing? Should you be shorting this thing? How much can it really actually go up here? What's actually going on? And I just think that most people just don't have really the right education when it comes to these things. You tend to read a lot, the stuff that's out there in social media, and it's nice for people to get the right idea. So, in any case, I'm gonna probably sit out this one a little bit longer. But, however, I'm most likely going to take some sort of position in SMCI here in the near future. But you have to understand the dynamics behind SMCI and why it moved so crazy. And it's really nothing like NVIDIA. And I'm going to explain why here right now. So you look at a stock like NVIDIA, and I'm going to pull this up on the screen real quick. Let me put it on this screen over here so you can see it. We look at a stock like NVIDIA. Now, NVIDIA has obviously also been moving parabolically in the past 6 months to a year. However, when you look at a stock like NVIDIA, you look at shares in the float, which in shares outstanding, which is the total amount of shares, and you see 2.47 billion. Then we'll go ahead and look at SMCI, and we will look at that, and it will be 50 million. Okay, so nearly, I don't even know what that is, 100th of the amount of shares in SMCI. So what that basically means is, when you have a lot less shares, when big money rolls in, it's going to make the stock obviously parabolically move a lot quicker because there's so many less shares. So that's the reason why SMCI has exploded so dramatically, and it's obviously huge. Now, there's obviously going to be a substantial amount of shares that are going to be in the short float now. So we're showing here just on FinViz, which is just a basic free website anyone can use, we're showing a 10% short float. This data is usually, a week or two outdated. So I would be willing to guess that short float's probably in the 20-30% range by now, especially given that the stock did kind of peak out a little bit on Friday for the first time and drop also rather parabolically. So we'll go back to the chart here and we'll take a look. So when it comes to a stock like SMCI, you want to be very careful. Right now you look at these options and the premiums are huge. You can lose a nut real quick when it comes to, I read stories and Reddit, I'm not too big in that scene, but every once in a while I will go in there and, and see what the sentiment is, what people are saying about certain stocks, and a lot of people lost a lot of money on Friday, and it's really sad to see. And that's typically what happens in these situations. The premiums are super high. People don't know how to buy options, so most likely they're buying weeklies or dailies, which they have no business doing. I don't even do that. I'm a professional trader. It's just the IVs get crushed and you lose money real quick. I think I saw someone bought, a shitload of, $1,500 calls or something on Friday and lost a substantial amount of money. Now, you could buy those out longer term and might be okay. But in any case, SMCI is most likely going to be moving into some inconsistent directions, so to speak, in the coming days and weeks. But you do want to keep an eye on the fact that it has such a short float. You want to keep an eye on that short float. You want to see how much this thing, and a lot of this is going to be based on what happens with the NVIDIA earnings this week. So this week, I think personally, and this could be the peak of the whole semiconductor AI craze. This could be it this week. It could. It's all been kind of surrounded around Nvidia for the past 3 to 6 months. I guess it's been the craziest. So really, Nvidia has really been the centerpiece to all of this. So when these Nvidia earnings come out on, I believe it's Wednesday, before hours or after hours, I forget. But either way, it comes out Wednesday. That's really going to show, it's going to shift the whole direction of this AI semiconductor industry real quick. Now, with the whole market kind of pulling back as a whole, as we saw last week, we had shitty PPI and CPI numbers. Market pulled back a little bit on it. We saw Nvidia drop on Friday. We saw SMCI significantly drop Friday. We'll pull up a shorter time frame here, and we can see, Friday SMCI took a huge hit. Went from 1,000, it was well over 1,000, and closed at just over 800, 220% drop. And that's what happens when you have a stock like this that's getting Nvidia type attention, but only has 50 million shares in a float. It's nuts. It's a great trade because you can get rich quick with these. But you got to be super careful. Do not be taking any positions that you can't afford. It's gambling, to a lot of, to a big extent, because it's just so volatile. I mean, you can find some direction with this thing, but again, we saw a peak out there. Most likely, we are going to see some sort of a recovery. So anyone that is buying out, it would be. This is a good one. It's good to do like what I like to do when it comes to straddles. Most people misunderstand straddles and strangles with options. You want to buy them out longer term. You're going to get. What I would do with SMCI if I take a position here, and I might, consider something this week depending on how these Nvidia earnings go. But you're going to see a recovery here, but you're also definitely going to see another drop. You're going to see both. So with that being said, it's just a really simple concept, is that if you buy calls on, let's say you buy them 3 months out or 6 months out, something nice and safe. You don't got to buy 1 million contracts, like buy a couple calls, a couple puts, at around a $900 strike price, and most likely you're going to win both of those trades. I think it's safe to say that it's going to pull up again, and it's also safe to say that we're going to see a drop again, just given the dynamics of this stock. It's got so much attention. It's in the AI game. It's right in the center of the AI game, right next to Nvidia. You only got 50 million shares in a float. It's in the Russell. And you're getting billions of dollars thrown at it, hundreds of billions thrown at it. So, you really want to be careful this one. You really just don't want to take one direction on this thing. It's really just too hard to tell because, the whole semiconductor thing could come crashing down this week, which is a high probability. There's a lot of people that are shifting and thinking that Nvidia might come up short, or even if Nvidia does come up with outstanding earnings, you might see a big sell-off this week. So you got to be super careful with these. I tend to avoid them. The better you get at trading and the more experience you get with trading, the more you start avoiding these things, because you remember those times where you got involved, most likely you lost money. A lot of people lost money here. Some people did really well because it did run for a substantial amount of time. You got weeks here, but it finally did dump out. So you got to be super careful. You got to understand the dynamics behind a stock like this, and you got to be super careful. But the only play I really see right now forming with SMCI that I would take any sort of a part in would be some sort of a long-term straddle or strangle type of play, where I'm kind of playing both directions. Because I do think it'll probably run up to the 1,000 range again. It'll probably take another rip at that, but it's definitely going to take another huge drop, and we just don't know when that's going to happen. So to be safe, you buy calls and puts out many months, so this way you have a chance. And you also got to have the money in your bankroll. Don't be risking all of your money on this. Take a small portion of your bankroll, and you can do this. And so that would be my recommendation for this. I think any experienced trader that's trying to teach anyone to do anything properly is going to tell you this. this is the only play for SMCI. Anything else is basically gambling. Like, yeah, you could go buy a bunch of puts on this and say, oh yeah, it's going to continue to dump, and it might happen. But the premiums are priced so high that if you do not win that trade and you buy the contracts out too short term, you're going to lose all your money. You're going to lose the whole premium. So you got to be super careful here. The only play really on SMCI, as of what I'm looking at right now, given this situation, is maybe a long-term strangle play. 90 days out, buy some maybe 900 calls, maybe some. Either I would probably stay close to in the money too. I wouldn't really buy anything out because those IVs could get crushed if this thing flattens out. So again, be super careful with this, but I think the only play you really have is in the money calls, in the money puts, 90 days to 6 months out on a strangle play. And I think that's probably a good solid play that as long as you take your profit when it comes, you'll be successful. But other than that, sit on the sidelines and watch this ridiculous show. This is obviously, you look at this and you see a lot of money that can be made. Yeah, you can, but this is not how money is made on Wall Street. This happens every once in a while. You can get maybe lucky in something like this, if you're trading, steady, but you don't want to be throwing all of your bankroll at something like this. It's extremely risky, and don't let the FOMO affect you, because I can guarantee you a lot of people that made money on this, a lot of people lost money on Friday. Anyone that had the balls to stay in through this whole thing going up definitely held Friday and held on all day, because they've been holding on for weeks and they just watched this thing lose $200. So I'm hoping that they had long-term contracts. A lot of people had dailies, and weeklies got crushed. So again, with stuff like this, be careful, but look at your fundamentals and understand why these things happen. And just be super careful and look into what you're doing. Don't ever just take wild risks without getting the proper education. So you have to understand these things fully, understand the stock, why it moves. You got to look at the fundamentals of it. You got to look at the technicals and understand what it is. Don't just listen to what you see in posts and on stock twits. Just be very, very careful with something like this. But when done properly, you can lower your risk and increase your chances of doing very well. Thank you. If you have any questions, leave them in the comments. Be happy to answer. Good day.